Hey everybody, this is Peter Hudson and I'm a real estate agent in Arizona. A client asked me a while back if they can get a new mortgage loan on a home that they wish to purchase if they owe back taxes. The answer is maybe. To be honest, every mortgage loan approval is going to hinge on the loan underwriter and the criteria of the loan institution. Both of the biggest loan backing institutions, Fannie Mae and Freddie Mac, have certain criteria regarding unpaid taxes. And as a disclaimer, the information that I'm about to give you can change at any time, so you'll want to be sure to be discussing these things with your particular loan officer or loan originator. You may not have to clear your tax debt before applying for a mortgage. However, you must have an approved IRS installment agreement in place. The installment agreement must indicate the terms of the repayment and the monthly amount due. In addition, you must have made several installment loan payments on the new installment agreement, and you must also be current with the installment agreement with the IRS before applying for the new loan. Now here's something to know. The installment payment must be included in your debt to income ratios as part of the home qualification process. For instance, a 43% debt to income ratio is the most common threshold for mortgage programs. If you have a debt to income ratio of 43% or lower, your chances of getting a mortgage loan are much higher than if you have a debt to income ratio of higher than 43%. So if you earn $5,000 a month, and if you make a $300 a month tax payment, and if your mortgage interest rate is at 4%, you can borrow about $63,000 less with the tax problem than if you had already paid off the tax problem. I have more information on debt to income ratios and how they will affect your mortgage loan approval on this website, so be sure to look for that information. If you plan to buy or refinance a house while repaying taxes, it might help you to negotiate a lower monthly payment and longer repayment period with the IRS. That way, you will qualify for more financing if you need it. If you are not applying for a refinance on a new home or a new home loan, it may be a good idea to go for the highest payment you can possibly make, pay the tax problem off as fast as possible, and then apply for your next mortgage with a clean slate. I will say again, these things change and lending institutions change their policies frequently, so be sure to discuss these matters with your mortgage loan professional. Finally, if the IRS has already filed a tax lien against your property in the county where the subject property is located, you will need to pay off the entire federal tax debt and have the lien released prior to applying for a new mortgage. I hope this information was helpful. If I can help you in any way, please feel free to reach out to me by email or by phone, and thanks for watching.